The following is a presentation of TFNN.
Good afternoon, folks, and welcome. This is our Celestial Charting webcast. Sorry that we pushed it back last week because of the holiday. Hope that everyone had a great Thanksgiving holiday weekend. There is, not a ton going on from a celestial standpoint, and so to really make great use of the time, I wanted to change things up a little bit like we did on the last webcast, and really use this as a training ground, as a teaching ground, as an education vehicle. And what I did send out a email a little bit earlier. Hopefully, each of you received that, and I did get some responses back. And that was just simply asking, what questions do you have about any of the patterns that we use, or just any other questions that you might have in general about anything that we would take a look at. And so we'll go through some of those questions as well. We were really trying to work with the system, see if there was a way that we could make this almost like a conference call, if you will, where you would be able to speak if you had a microphone hooked up to your computer. But there's just in this case here, there's just too much technology going on. So to make it easy, what I'll ask you to do, is any questions that you do have, if you go ahead and type them in on the system, then we'll just simply spend, as much time as we have available to us, up to about 3:55, if we go that long. And I'll do everything that I can to answer your questions. So let's go ahead and get into it. And at least from for all the new subscribers that are listening either on the archive or listening live, this is the 3 p.m. We do this every other week. And so our next week, because we missed last week, we will also have a webcast next Wednesday, 12/7. And what we'll be taking a look at is the full moon lunar eclipse that we have that's taking place on October the 10th. The next aspect that we have coming in, we'll flip to that here in just a minute. But these are the rest of the amazing how fast time flies. These are the rest of the dates here for the year. So we've got two more left on the 7th and on the 21st. And we'll probably take a look at that one on the 21st to see how that's following with regard to the weekend and everything. And for those folks that are new with regard to the celestial aspects, what I recommend is that folks go ahead and purchase a New American Ephemeris 2007 to 2020. It's produced by Starcrafts Publishing. There is the phone number. And also, for anybody that's new that's listening, all of the archives of our Celestial Charting webcast, where we go through new moons, full moons, combinations, where you have multiple lunar cycles that are occurring, different planetary aspects. There's just a hour's worth of educational information for you, or studies that we've taken a look at. And so go back through at your convenience through all the other webcasts that are available on the Celestial Charting area. This here is the Daily Aspectarian. Not a lot of activity for us to take a look at. This is at the bottom of your ephemeris. And here's just simply some information about the primary lunar phases that we take a look at. For trading. These here are the primary angles that we use when we're taking a look at the angles between two planets. We use these five angles, if you will: square, opposition, trine, sextile, and conjunction. And again, more of that is described in the prior webcast. Now, with regard to the remaining lunar dates that we have in December, you'll probably want to go ahead and just mark these down on your calendar. What we had last week, coming into the day before Thanksgiving on Wednesday, was a did I have that right? Friday. Okay, so on Wednesday we had a third quarter moon. On Friday we had the new moon come in with the solar eclipse, and typically a new moon is a cell signal, has been a cell signal for us. December 2nd, which is this coming Friday, is a first quarter moon. But, go ahead and mark the rest of these dates here, taking you through January 2nd. We're going to take a look. I'm going to flip through this chart here right now, this being the lunar chart. In fact, it's probably easier if I go ahead and pull that up on my screen with my charting software. That way it's easier for me to zoom in and easier for you to see. So let me pull that chart up here. That is this right here. And if we go back to the third quarter moon cycle that we had, really let's go back here to November 10th, the last time that we had our webcast. And on November 10th, we were going into a full moon, and we saw how that full moon cycle really only lasted for one trading session, if you will, or two trading sessions. And then, the market, if you will, just kind of gave it up when the market was moving down into this third quarter moon here. This third quarter moon, because the market was moving down, would normally have been a buy point. We did not do that. That failed, if you will, and so we did have two cycles here where we did have a failure. Now, as in retrospect, now coming back and taking a look at it, you can see how actually between Wednesday and Friday, this cycle here is working. So what does that mean to us? Well, putting that together, what we do know is the market clearly is moving up into a high. You can see that. This is the SPY chart. And to see what charts it is that I'm working on right now, up here in the upper left-hand corner where my cursor is, you'll be able to see that it's the SPY and that we're looking right now on the daily time frame. So that way we won't have to worry whether or not I have it highlighted inside the chart. That being said, so knowing that we're coming into a high, and what I was looking for was us to get to the 0.618 as far as an area for us to go short. I wasn't expecting that we would have such a wide range bar, if you will, which is what we have had today. And when you have a wide-ranging bar coming into a retracement area, what that tells us is that we should wait for the next retracement area. And so what that would do, folks, that would take us into the 0.786 area. That would take us on the SPYs. That would take us into October 27th. Now, we use these lunar cycles as a timing gauge, and in this case here, coming into that 0.786 area and coming into a swing point, what we will give priority to is the volume coming into that swing point, that October 27 swing point. So you can see there's 389 million shares there today, just as an example, with it being such a huge up day. And if you wanted to read my chart here, if you start over on the very left, you'll see where we've got the date. So we've got today. You can see, the close, which is, as of each second until the market is closed, what the high has been for the day, what the low has been for the day, what it opened at, and what the current volume is. So you can see, the volume continue to tick. But you're at 214 million shares with 45 minutes to go. And, when we made the high up here, it was made with 389 million shares. You can even see coming into the swing point here, if you just simply went over to the left and you took a look at what we were coming into, you had 330 million shares and 214. So what the SPYs would have to do, they'd have to do 115 million shares just to, tell us that from a volume standpoint, a pure volume standpoint, that there was the strength behind the price conviction in this move. So what it looks to me like is setting up for us from a short side of the position is taking a look at Friday as being the day, with it being another lunar cycle. And most of these lunar cycles have worked pretty well. And so we'll take a look at that, and we'll also take a look at the volume as we come into the low there of 125.96. So that is, that's where we're at from a lunar standpoint. This chart here goes back quite a ways, as you can see. To try to put this in the newsletter it wouldn't work real well. I will find a way to get Mike I'll update this so that it's larger and you can print this so that you've got one for your records. There was a link that was sent out, I think, 2 or 3 weeks ago, but I'll send out an updated chart here within the next day. Now, what I want to do is just simply go to the questions that were asked of me, and then I'll have you guys start typing in questions. So the first question came from Satya, and it's with regard to the Qs. So let me pull up the Qs chart here. And the question that's being raised is taking a look at the focus here of the October 4th swing point. And the question is, 4 scenarios were provided to me. And when we take a look at the Qs, what you can see is The low here now, she had typed in 5010, but you can see the actual, and so you can see that that's what the low. If you take a look, up here in the upper left-hand corner, you'll see that's the low that we've got. You'll also see that the high there on that swing point is $50.60. So the question is, and what you'll also see is the volume. The volume that I show is 136 million shares. Satya had indicated 150 million. So the actual volume, and this is a good feed, is 136 million that we're talking about. So the question is really with regard to when we refer to a rejection on price and volume. So let me give you the different scenarios that you would want to look at. And when we talk about swing points, I've talked with several of you over the last couple of days, and as I do each and every week. And when we're taking a look at swing points, what you'll see when I'm taking a look at swings, the swings that have the most importance, that I put the most weight on, are the ones where you've seen a true major shift or change in the marketplace. So clearly that here is on October 4th. The next swing, if I were going to the right-hand side, going right of October 4th, that we would be looking at is the next high that we made. That here is this October 27th time frame. And then the next swing, if I continue going right, is going to be the low that was made on Friday, the 25th. That's not to say that there aren't some other swing points within here, because certainly the market was moving up. You could say this is a swing point here from October 18th, or you could even say because it was a little bit higher, and then there was another swing point down here on the 20th. And not that they don't have meaning, but what I referred to yesterday when I was trying to explain to one of our clients, one of our subscribers, was this, that when I take a look at what's going on in the internal side versus what's on the outside, I take a look at this as being the earthquake. So these larger ones, October 4th, the ones, at a high here, where this is the high of the, of the market that we're looking at, this one being the low, those are the actual earthquakes, if you will. And just like with earthquakes, you have different aftershocks. And so what we have inside the larger moves are these different aftershocks. Sometimes you have big aftershocks, meaning that with inside here you could have some significant volume. And if you do, we'll take a look at it. But what really gives it meaning for us that we want to take a look at is we really want to take a look at these major swing points. So if I go back to the left of the chart here, the next swing point that we would look at going left would be this one from September 20th. You can see there's nothing else around it. It makes clearly a high out here. And as we pull back, the next swing point that we would be taking a look at is August 19th. And then you've got another one right up in this area here. And for the overall low, you would be taking a look at this swing point from August the 9th with 193. Is that right? 193 million shares. Now, so the question is a rejection of a swing point on price and volume. So let's say one example is this, and that is that on October 4th, let's assume that the markets move down. So Friday, we're going to use this as Friday, we're going to go short, and the markets move down into the next lunar phase, or whenever it moves down into. At the point in time when it gets to the October 4th swing point, and if it gets to the high, which means the high is 52.29, and let's say that it does it with 100 million shares versus the 136 million shares that it shows there. Gets down in there and closes above it, that would be a rejection on price and volume. At that point in time, if you wanted to take the Qs and go long the QLD, what you'd have to do is you'd have to, take a look at understanding that even though it tested it, it doesn't mean that it still can't go down to the bottom of that swing point, that $50.10 range. So as you can see, you've got a fairly wide range bar, and in that case, just because it goes down and rejects it, it does give you a signal, and you'd want to know what else is going on, perhaps with the other indexes, perhaps what's going, so that you have a little bit of synergy between what you're seeing on one chart, so that it's similar to other charts. Is the Qs leading us down and the other one's lagging? Is everything else maybe testing the bottom of a swing point from October 4th and this one testing the high? But just from a pure standpoint of testing a swing point and rejecting it on volume, in this case here, if it just simply touches the high, and you'd prefer it to go to, instead of 52.29, at least 52.28. So if it went to 52.28, reject and touches that, and it closed, let's say, at 52.40, and it does it on less than 100 million shares, that would be a rejection of price and volume of a swing point, and you could take a trade. That's why you then would go back to your probability calculator, and if you're going to just simply trade the Qs, you try to understand if where you entered and what your average true range was, multiplied times, let's say 1.618, like we use, whether or not that stop would take you below $50.10. And that would help you to determine whether or not you've got the right, reward to risk trade. It would also help to understand, is volume picking up as you're coming down into that? So maybe you came into that with 100 million, but the day before was 80, the day before was 60, if you will, just as example. So are you picking up steam coming down into it? If you close into it, let's say you close into the swing point, so you not only get to 52.28, you close at 52.28, and you do it with 100 million shares. At that stage, you don't know what the market is going to do. You do not have a rejection. What you do have is you have coming into a swing point with lighter volume, and it's giving you the signal that it may go down and test the bottom. And until you get a true rejection of the top, if you close with inside a swing point, it says that the market may want to continue moving, in this case here, lower. Your ideal setup would be the third scenario, where what would happen is you would go down and you would test the 50-10 area. So let's say you would go down to 50.09. You would do it on, let's say, 100 million shares. The lighter, the better. So let's say it's on 100 million shares, though, 30% lighter. And you close back above 50.10. You close right at 50.11. If you do that, you also you would then have a rejection on price and volume. That becomes easier to pull the trigger, if you will. Some people would trade the stock and get into a trade and use a very, very tight stop. In a market like this where you have volatility, I do not recommend doing that at all, because what you're saying to yourself is that you know where the market is going to go, and the reality is we don't. It's a good trade. You make sure you have a wide enough stop, because if you reject the October 4th low with lighter volume, close back up inside it, what that says is that there's a terminology you've heard before. If you can't bust them down, you'll try to bust them up. That means you would then go up to the next high swing point. And, in that high swing point in this case here, we don't know that whether or not we've hit that yet. But let's assume that, we end up coming up and testing the high from October 27th. It would indicate to us that that's where it would go to. Is that even a possibility? Well, sure. Look at the ABC that could be forming here. That becomes our A to B point, and our C point could be the test of that area. So you can see that just simply a normal A to B equals C to D coming into that 0.786 area could get us easily down to 51.84 and get us inside that. Get us inside there. So if you were to try to come down to that area, and meaning the area of the October 4th, and you reject that swing point, you would go up and test the high. That's typically how that would work. So that is the four scenarios where you're testing the high on lighter. No, let me give you the next scenario, which is you come into the top of the swing point on October 4th. And it works this way no matter what it is that you're trading, with the exception of currencies where you really don't have a good enough volume feed for it to mean a hill of beans. But let's assume you're trading the ETFs here or a stock. If you come into that swing point, the high of 52.29 with 150 million shares instead of 136 million shares, even if you close above it, meaning you close at 52.30, to me, it says the work is not done. You were coming down inside it with too much volume. And so you would have a rejection with price, but you would not have a rejection with volume. And you really want both of those in order to put yourself to take on the next position. And so in the case of, let me just go ahead and pull up the Apple chart here, because that gives a good example, I believe. We'll pull up the Apple chart here, and so we're taking a look. This is an example here of when we came into the swing point, which was from October 4th, had 44 million shares, and we came into that swing point on this day here with lighter volume. Here we had a rejection, right? On November 11th, we had a rejection because you came in with 23 million shares and you rejected it. Now, if you were just simply to not pay attention to the other signals that were out there, and the other signals being that we had this island reversal, which is a major reversal pattern, and you have to understand, in order to know where you're going to, you have to know where you came from. And so when I take a look at that from a charting standpoint, I want to understand where is it that I came from in starting this ABC pattern. Well, I knew I was coming from a island top reversal. So even though we got a rejection here, what we did see is on the way down on the C to D leg, what you saw volume increasing. So volume was increasing on the way down into this, even though when we hit it with lighter volume than what we had here on October 4th. To me, knowing where we came from, the island reversal, knowing we had volume picking up, knowing that the previous island reversal had done a 1 to 1.272, that was why I said I expect Apple will do a 1 to 1.272, A to B equals C to D. That price projection is 363.63, and where Apple got down to on Friday was 363.32. I'm no genius. Far from it. It's just nothing more than going back, take a look at patterns, and applying the what it is that I've learned in watching these in chart after chart after chart. And so when I do use that phrase, it's, how do you know where you're going to unless you know where you're coming from? That's really what this is in reference to as far as when we, try to start our signal. Even that being known, that doesn't mean that's what's going to happen. You folks all know that. That does not mean that's what's going to happen. It's just for me, it's a reference and a frame of mind. Now, what Apple also did out here, I believe that it's important to understand the difference when you're trading. I think one of the great tools out there is understanding the thousands of years worth of candlestick patterns that are out there. And at this low here, knowing that on October the 5th, that Apple had created this bullish engulfing pattern, that this area here should be good, a very good support area. Never got down there to test that. Now, in this case here, I would not be ready to go along the Qs, knowing that Apple is a significant weighting in there, until you clear this October 4th area. And what we can see is the high there, 381.80, and we take a look at a day like today, the market's up 410 points. Apple being a leader, let's face it, there's, 35 people or so on the 46 folks that are on the webcast here live, and I would wager to say that of the, let's say, so we'll just round it up and say 50 people, that at least 2 folks out there are going to buy an Apple product. That would be 3%, and that's probably more than that. At least, actually probably 10%. I'll bet you there's at least 5 folks out there that are going to buy some type of Apple product for somebody for the holidays. And even if it's likely more than that, I'd ask you to raise your hand if that's really the case. And so there's still a leader, if you will. And until Apple clears this area, until it clears this swing point, it hasn't given us any information. What we can see today, it's gotten up to 381.62. Again, that high here of the October 4th area is 381.80, and you're coming into that area today with 10.5 million shares. 10.5 million shares. Yesterday, Apple did 13 million shares, and there's only 30 minutes left to go. Not that they can't jam it, if you will, but still only 13 minutes left to 30 minutes left to go. So for having such a price move, well, what's really going on as far as the move is concerned, folks, it's really all about the currency piece, which is why in so many of the newsletters what I have been doing is pulling the currency aspect of what's going on inside the markets, because it is the single best correlation. It used to be just taking a look at the yen, and the yen didn't make up much of the dollar index, and now what we're taking a look at is the entire dollar index and the euro, because of obvious reasons that are out there. So in this case here in Apple, if you were going to take if you were going to go ahead and take a long position in the Qs, you would really, really want to make sure that at least you got above the 381.80. But this is, showing us right now that at this stage that there is still some weakness in the Qs out there. So that's with regard to Satya's question about the Qs. Before I move over to anything else, does anybody have any questions about what it is that if I confused you more, or do you have any other questions before I then move on to Ken? I believe, Ken had sent in a question asking about ZSL and TZA. So if you do have questions, go ahead and type them in. At this stage, though, I will go ahead and I'll go over into the TZA, which would be the IWM. So we'll take a look at that. So in order to trade the TZA, which is the triple inverse of the small caps, what I would really do is I would make all of my decisions off of the IWM. And, in fact, in many of the trading applications that you guys use, you probably can put triggers in place if you were just simply, trading something on your different than what's inside the newsletter, maybe something coming from some other subscriber or whatever it might be. You can trade, you can typically get in and out of the TZA or the TNA based on triggers with regard to what's going inside the IWM. And I would like, and from my standpoint, using the IWM as your trigger mechanism, whether it's done manually or from an automated standpoint, is really what you should do. So let's go ahead and clear off the IWM out of here altogether. And what we see that we've got going on in each of these markets, are two gaps. And there's no question when you take a look at today, you can see in the IWM you're trading right now towards the top of the range. At this stage, coming into the close, we can see volume-wise, 63 million. What is that going into? Well, what that's going into is 129 million. So here's another great example, okay, of us to take a look at follow up on Satya's question. So we're already inside the October 27th swing point when we take a look at the IWM. The low on that, 72.65. You can see we're trading at 73.14. So unless we see a real pullback coming into the close here, it looks to me like we will close inside this on lighter volume, 129 million again versus where we're at right now, 63 million. I'll just simply draw the line on here in case there's anything that happens while we're just simply, where is my line tool? There we go. So it's very clear for everybody. And in case anything happens while we're on here, as well as exactly where the volume is. Now, it's one of the things that I do love about this trading, this charting software. Again, this is Ensign Windows. You're getting live feeds, you're getting live volume feeds. It becomes very easy for you to line up your lines in the sand, if you will, or your swing points with regard to volume, so that you can easily see what is happening. So in this case here, we can also take a look and see what the retracement is on the IWM from the highs down to Friday's lows. What we can also see is we're at the 0.618 area. Now, on my charting software, because this gapped up, you still have to, again, you visually take a look at this as being a wide range bar, but it, quite frankly, gapping up and staying up like this takes a lot of volume. And the mere fact that we gapped up into that 0.618, to be consistent with everything I know and everything that I've communicated in the past, this says to me this at least wants to get to that 0.786 area. That's 74.76. The problem, just like we took a look at Apple in reverse, is even if it gets to 74.76, we're still inside this swing point. It hasn't given us any kind of conviction one way or another with regard to what it wants to do. So in this case here, let's say we come into it on Friday. Let's say, the market takes a little bit of a breather tomorrow because we did 422 points, today, several hundred points a couple of days ago, and it takes a breather just as we did here. In fact, what we'd all like to see, quite frankly, is we'd like to see that. And then Friday, we'd like to see that third gap. If we see that third gap coming into this area, knowing that we also have a lunar cycle and knowing that we use wide enough stops, we'll go ahead and at that stage pull the trigger on a short trade. What would stop us from doing that? What would stop us from doing that would be some massive pickup in volume inside the IWM, which could, even if that took place, tomorrow or let's say on Friday. And if that were the case, then we wait for a full test, meaning a full test of testing out the 76.97, that 1027 high that we have out there. So that's on the IWM. So with regard to the TZA, if you're looking to get into the TZA, it's easier to make your decision off of what's going here in the IWM. I'll pull up the TZA chart, but this one here is much easier to make a decision what's going on in the small caps, and then go ahead and enter the TZA. And when you do enter the TZA, how did I do that? Oh, okay, let me come back over here. When you do go ahead and enter the TZA, then you don't have to worry about the swing points or where things are at inside these triples. Instead, what you're doing is you're using the position size calculator that's automatically going to help you to identify the stop. and it's going to tell you what your average true range is. And what that's going to do, it's going to multiply your average true range times a factor. And in this market, what you want to do is you want to go ahead and use the 1.618 area. And that's how I would trade the TZA coming off of the IWM. If you prefer that, and I'm not sure what, let's assume we come into Friday and we do go short. I don't know whether it will be the small caps or whether it will be the Dow or what it is that I might suggest as the trade. And but if it's not the IWM and you decide to go ahead and take that and you want to use the TZA, again, please go ahead and use 1.618 as your stop multiplication factor to identify your position size. Really important during this very, very volatile time. It'll keep you in the trade and allow you to make money as opposed to putting up your 1% risk, getting blown out of the trade, only to end up having it eventually after a few days have moved in a direction where you could make some money. So that's with regard to the TZA. I'll switch over real quickly. There was also a question about the ZSL. And so on the ZSL, folks, that is the triple. And I do recommend playing the triples. And let me describe to you why. And the reason is during these volatile time periods, these are the best times to play the triples. Because of that volatility, and you get better reward to risk. What the problem that people have tended to have, if you take a look at maybe some of your past trading experience and see if this is true, in playing the triples, what happens many times is that folks have played too tight of a stop, and you've gotten knocked out. You see, there is no more risk in playing the triple than playing a single or a double. And what I mean by that, if you truly use the money management techniques that I'm teaching you, the money management techniques say we've already identified our risk before we've entered a trade. It's going to be 1% or less of whatever our free trading capital is. So on $100,000, we've already put together a fixed risk. It's $1,000. It doesn't matter whether we're playing the TZA, the IWM, the TWM. It's $1,000 that's really at risk. So then, once you've identified your risk, now you're going to figure out what's your trading vehicle. Well, your trading vehicle, in my opinion at this stage, should truly be the triples. And so you want to take a look at things like a ZSL, like a TZA, like a SQQQ, SPXU. So you want to take a look at those, because the one advantage that you'll have above everybody else that trades these vehicles is you're going through a step-by-step process where the very first part of your transaction is I'm going to risk 1% or less of my capital. That's fixed. I'm going to then identify my stop, and you're going to use a average true range, and you're going to use a factor that increases that so you stay out of the daily volatility or the wide volatility. And then once you have those two things, it's then just simply a matter of how many shares do I need to go out and buy. And just using that three-step process puts you at such a competitive advantage against any other trader that is out there, because any other trader that doesn't use that believes they know where the market is going to go and where the triples are going to go to. And I'll put our trading system up against anyone's, because I don't need to know where it's going to go to. I just know that if we stay outside the true range and we're right on our decision, we're likely going to be in the transaction a little bit longer. In order to trade the ZSL, your best bet is to understand what's going on actually with the silver contract. Just like I say, in order to understand what's really the best way to trade the TZA, you really want to understand what's going on with the IWM. If you really want to trade the Qs, the SQQ, what you should do is go over to ProShares each day, and you can download the exact holdings with inside there, and you'll see that the top 10 holdings of the Qs represent somewhere around 60% of the total index. So you can just simply go take a look at what the top 10 holdings are going to do. You know, you guys have seen me do it in some of my newsletters where I'll list out. In fact, I've done it with the Qs before, and I've listed, and in essence what I'm doing is I'm giving a thumbs up or a thumb down. You know, is the pattern completing to the upside, to the downside, or is it flat, if you will? And then when you know what's going on with the majority, it makes it even a little bit easier to pull the trigger. Takes a little bit more work, probably about an extra 15, 20 minutes or so, but it is really a great way to be able to trade those vehicles. So the ZSL, the way that I would simply trade that is I would be paying attention to what's going on inside the gold contract. You can see today, trading at 32.84, and not a significant amount of volume to the upside here. Those were the questions. There was one about just simply the general overall market, and I'll come back to that. I want to just try to answer some of the questions that we have here. So you've got a question from Pedro asking about the VIX, the VXX, WDC, why the stop change on AN. Let's go to that because that's an active trade for us first, if you will, and that was Auto Nation. And I believe I've got that chart in here. Let's take a look at Auto Nation. I don't, so let me pull that up here. AN. And we're going to take a look at Auto Nation. And the question is, why a change in the stop? Okay, so when I was sending out the signal to you, what I do, folks, is I take a look at our trades. I have several screens in front of me, and especially the trades that we're in, I am watching. And so what I will show you, and I have them on normally different time frames. I'm going to put up the 1-minute time frame, see if anything sticks out at you on Auto Nation here in the 1-minute time frame. Is there anything that sticks out when you now take a look at this chart here on Auto Nation? Well, absolutely. What sticks out here is this bar right here. There were 100,000 shares, 100,100 shares that were traded at 11.49. You'll see that my Twitter alert went out at 11.50 or maybe 11.51, something like that. And so at that stage, what we had was we had a huge volume with regard to any other volume in a 1-minute chart with regard to Auto Nation. No wide range bar whatsoever. And you know what that tells me is there is some, is that a buyer or a seller? Now, that's a question that I can't answer. That's a question that, well, it's both, right? You've got a buyer and a seller in there. The question is, which one is in control? Is the seller done selling, and is the buyer done buying? Which way is that going to go? But when I see something like this take place, it makes me stop and say, So the most important thing in a market that's up 441 points, 442 points right now, is that if this was a buyer that's coming in and the buyer wants to defend its position, if you will, that buyer, how far will they let that go before they step back in? Is always the question. If it's a seller, are we going to see some continued sales? And so I just simply took a look at where we opened today and the low on the open. I just simply tucked it 1 penny behind that. You can see the low was at 36.15 and said that the reality is in this up market here that we really shouldn't get down there at 36, below 36.15 today if this thing has some real juice in it. And so it just simply was a realizing that there was a marker out here of possible very big fish that knows something that you and I don't know. And if somebody now, that's not to say that a buyer's not smart and they're not wanting, they bought all these shares at $36.52. Of course they'd want to be buying some at 36.10 and 36. But the reality is, that is why I adjusted the stop. Does that make sense to you guys out there? I wish we had audio. It'd be so much more fun to be able to do this. Okay, so that's on. That is on Auto Nation. Now we made money, so not a bad deal, right? You never complain about making money, and you just simply do what you can to protect your investment. Okay, so let's go back. The first question was about the VIX here, and what is the question more further about that? Could I please look at the VIX? What is the question about the VIX? And that would help me out there. If you could, Pedro, if you could type that in so I know a little bit more about what you're looking for. And while you're typing that in, another question is look at an exit for WDC. Let me go ahead and we'll pull up WDC here. And on WDC, okay, so if we're taking a look at WDC, what you've got here right now today. Let's see here, what do we got here? We're in this consolidation. So you're up on some decent volume. You got 5.7 million shares. If we just simply go over to the left, you're tackling 9.3 million shares, the high there, 28.96. You're up above that high. Okay, so that's a good thing. You'd like to see it close above that. If we come over our next high that we've got out there, swing point, if you will, it's got 7.2 million shares, 29.48. So you're not above that. 7.2 million shares. You're coming in here with 5.7. The next one, you've got 2.6 up here. What you'd really ideally like to see here in the next 15 minutes is see it close above 29.48. I don't think it's gotten above that yet. So it hasn't gotten above that yet, so that would also be a good thing. So if it doesn't get above 29.48, you know what I would do is I would stay here at the moment. I don't know where your entry is, so you might want to consider raising the stop. If we just simply take a look at an ABC pattern, this is the B point. You're above the B point on lighter volume, 9.3 million versus the 5.7. You can't complete an ABC, but it does make you want to take a pause there. You like to see getting up above the B point on lighter volume. You can drift higher. The higher area where you would likely drift to is right in here at the September 16th swing point. So watch when you get to 29.64. I'm looking at going long. Steve, the VIX. Okay, so if we go back to the VIX here, for Pedro on the VIX, that's the VXX. What you're looking at here is you're inside this swing point right here, November 8th. That had 21 million shares. You're in there with lighter volume. Because you close inside there, you want to at least have it test the low of 40.75 with less than 21 million shares. Close back inside that, and then you could take a look at that. Would be the information that I would use as the market is right now in order to be able to do that. The nice thing about getting underneath that is from a retracement standpoint, you would be getting down into that 0.618 area. That would be a swing point, and then you could see it close back inside there, and then you could consider the trade. So I hope that helps you. Let me go back. It looks like, so we've answered Ron's question about AN. Got VIX, got WDC. We're going to take a look at the EUO, which is the short on the euro. Is that correct? Is that correct, Jack? Let's quickly go over to the currencies here. And first, we're going to actually pull up the euro currency pair, and I will have you folks trading currency pairs here. That is my 2012. What do you call it when you do it at New Year's? My 2012 resolution is to start getting folks trading the actual currency pairs, so just so that I have company at 2, 3, or 4 in the morning. So if we take a look at the euro here, and trading the currency pair versus the actual ETF is a easier, in my opinion, it's an easier and better trading vehicle to do that. So when I take a look at the euro, here's what I see as a positive, and I think I was trying to point this out in the last couple of newsletters, and that is this, the swing point. We take a look at the swing point, which is October 4th, and today it finally has cleared that area. Tested it, for 3 trading sessions. Right here, the first one that it tested it was November 24th. Couldn't get back above it. Tested on the 28th, tested it yesterday, and you now are above that. What this says to me is once you've cleared this swing point, that would be like asking Apple to get above its October 4th swing point. We'll go back and take a look at Apple with the market being up 440 points. Now that you're above it, you ought to get to the 136.064 right here. That's the first area. So if you're short the euro, I say you have to be careful here because now, when I say you have to be careful, here's the problem with trading the EUO. The euro is going to be trading overnight. The euro is going to be trading at 2 in the morning when London comes online. And the EUO is not going to be trading. And so a lot of the work can be done, and so that's why trading the Forex, that's why trading the currency pair, is an easier thing to do with regard to protecting your money, making money, because so much is going to be happening in the Forex market where the actual market for the ETF is going to be closed. So at this stage here, this is now the updated chart, I believe, for the EUO. Is that right? Let me make sure. Yeah. So in the case of the EUO, again, the thing is the EUO is correlating to the euro, if you will, and so the only way that I would know how to trade this would be taking a look at the actual currency pair. Otherwise, you're kind of trading blind, if you will, and so hopefully that helps. And one of the best things that you could do is if you have a charting system, such as Ensign or something else, is actually go watch the currency pair if you're going to be making your decisions on trading the ETFs. We've only traded one currency. We've traded the UUP. We did trade the dollar once. Then we traded the yen, through a ETF. You just won't see me do that very often with you. Unlike the Forex piece of it, that's a different story. Okay, Steve, oil's back to the highs. A good risk reward here. This is one that actually. It was Satya that we were taking a look at. We were taking a look at a trade on this, and the reason is because we had this bearish engulfing pattern right here on November 17th. We're up in here. I would actually like to see oil spike just a little bit higher. I'd like to see oil get to the 103.38. We're inside these swing points. Are really 102.89, so it's got a little bit more to go. And if we see that, you'll probably will see, and we close back below it, you'll probably see me come out with a trade on the oil through. I think it's the is it the UCO or SCO? I can't recall which one it is. Okay, so we got the euro. I'm just coming down the list here. Angie was also wondering about the euro. Okay, so she was wondering about the euro. RMK falls on Samurai Sword. Okay, Steve Oil, we got the oil. I'm going long. Okay, bad trader. How about Goldman Sachs? Do you recommend scaling a short position today? No, I would not recommend scaling in today. We're up 460 points. We're going to be closing at its highs. Clearly that's what what's going on here in the next 9 minutes. And this is and knowing that we have a lunar cycle coming in on Friday. I do not think that the reward to risk. What we're looking for is really a third gap. That would be a nice thing. Now, the caveat, folks, and I mentioned this maybe in my show this morning, is I still don't have my head wrapped around exactly what the Fed and all of the ECB and everybody is doing out here. When it becomes clear, if this is just simply getting ready to start another round of quantitative easing, I can tell you we will be long, we will be strong, we will go ahead and chase. We won't be waiting for any patterns to set up. I don't know that that's the case. I don't think that that's the case. The volume in our ETF structures is not showing us that that's the case. But the day that occurs, the moment that occurs, if the market's up 300 points, we will go in long at that stage, because all you have to do is go back to the August 24th time frame and take a look at that. And if you're waiting for patterns in order to get in to go long, they just didn't provide many opportunities. And that was one where you had to say, okay, you saw some candle patterns, you knew what quantitative easing was going to do to markets. So anyways, there. So you were confused on the S&P US dollar. I thought dollar up, market down. The dollar up, market down, that is correct. The chart that I showed was actually the inverse. I went ahead and showed the inverse of the ES mini contract and the dollar contract. That's what's coming up here right now. So as you can see here, I've inverted the U.S. dollar index so that it is more easily, so that you can see the true correlation with regard to the dollar index and the S&P. So right now, the blue line being the dollar index is not moving too much, whereas going into the close, which is kind of normal, we're seeing the S&P take off. If we just quickly went over to the ETFs, because I see we're starting to run out of time here, and I need to let the production guys get ready for Tom's show. So if we just simply, where's the SPY right here? You can see just simply as what typically happens coming in towards the end of the day here, you can just see how the volume is picking up. That's a 5-minute chart that we're looking at. If we just simply punch up to the 1-minute chart here, you can see all the volume, how it's coming in here towards the end of the day. So, folks, I hope that why didn't we close out our shorts last Wednesday or Friday? Well, we didn't close them out on Friday. Really for a number of reasons. Number one, we were at a point when we took a look at the currencies where, first I wasn't around the screens on Friday, so I took that day off. And when we were taking a look at the likelihood, the 70% chance of a likelihood of the Black Friday, and I did a chart on that. If you go back to the newsletters and take a look at that, we had a 70% chance of Monday finishing lower than Friday. And we also had 2 other lunar patterns that had failed prior to that. So that was the reason, and and I would quite frankly, I would if it wasn't a holiday, we might have made a different decision. I would have been near a computer taking a look at it. But so that's a question to that, JC. So, folks, 3:55. I hope that this is helpful, and what I would certainly like to continue to do in the future is, if the lunar aspects or the astro aspects aren't anything that's significant, or we cover it in a short period of time, I would like to really be able to use this as a educational tool as much as I possibly can. And so, what I'll ask you to do the day of, or a couple of days before that, is just simply send me the questions. I'll start compiling them. We'll put them in a list, and I want to do everything that I can, to help you to become a better trader. So hopefully that you're in agreement with that as well. And those folks listening to the webcast of it, please also send me your comments. So, folks, have a wonderful Wednesday afternoon, and look forward to talking to you again soon. Take care. Bye-bye.